Google is one of the most underrated companies in the stock market today, and here is whether you should buy the stock or not for 2025. Google has been one of the most dominant companies in the world, with a 90% market share on search engines like Google Search and YouTube. The company makes money through Google Search, YouTube Search, Google Ads, Google Subscriptions, Google Cloud, and other ventures like Waymo. And they recently reported their Q3 earnings, and it was reported that Google Search and YouTube both grew at around 12% for the year, but Google's subscription and devices segment grew by a staggering 27% year over year. And Google Cloud grew by almost 35% year over year, making it the fastest growing cloud provider in 2024, slowly but surely stealing market share from both Microsoft and Amazon. This shows us that although the legacy business is still growing at double-digit numbers, management is not satisfied with that, and they're constantly looking for new investment opportunities like Google Cloud and Waymo to increase shareholder value. And speaking of which, Waymo, their self-driving ride-hailing service, which is already miles ahead of Tesla's robotaxis, is expected to do 200,000 rides a week by the end of this year, and have already partnered up with Uber and plans to expand the service all over the US. And finally, the best part of this thesis is the valuation. The stock is trading at a 20 times forward earnings, which I believe is super fair for a company like Google. So to summarize, Google gets a moat score of 10, a growth score of 7, a balance sheet score of 9, and a valuation of 9, giving them a ticker time rating of 88, making the stock a buy in my books.